President Donald Trump's recent announcement of a very big deal with Ukrainian President Volodymyr Zelensky has thrust Ukraine's mineral wealth into the global spotlight. This agreement aims to grant the United States access to Ukraine's vast reserves of critical minerals, potentially reshaping geopolitical alliances and economic strategies. Ukraine is endowed with a diverse array of mineral resources, including substantial deposits of iron ore, titanium, lithium, and graphite. Notably, the country possesses one of the world's largest reserves of commercial-grade iron ore, estimated at approximately 30 billion tons, accounting for about 1/5 of the global total. These resources are pivotal for various industries, from steel manufacturing to high-tech electronics. The Ingulets mine, for instance, located in the Dnipropetrovsk Oblast, boasts estimated reserves of 937 million tons of ore with a high iron content of 63.5%. Similarly, the Berehov mine in Zakarpattia Oblast is one of the largest gold mines in Ukraine, with estimated reserves of 14.4 million ounces of gold and 144 million ounces of silver. These deposits underscore Ukraine's potential as a significant player in the global minerals market. The proposed deal, anticipated to be formalized during President Zelensky's visit to Washington, is designed to provide the U.S. with access to these critical minerals. President Trump has touted the agreement as a means to recoup U.S. investments in Ukraine, suggesting that American taxpayers will be reimbursed through the exploitation of these resources. This perspective positions the deal as a mutually beneficial economic alliance, potentially bolstering support among congressional Republicans for continued aid to Ukraine. However, the specifics of the agreement have raised questions. Initial reports indicated that President Trump sought $500 billion worth of profits as repayment for military aid, a figure not reflected in the current draft of the agreement. Instead, the deal proposes the establishment of a reconstruction investment fund, jointly managed by both nations, aimed at rebuilding Ukraine's infrastructure and cities. This approach suggests a long-term commitment to Ukraine's post-war recovery, intertwining economic interests with geopolitical strategy. Despite the optimistic projections, several challenges loom over the feasibility of this agreement. A significant portion of Ukraine's mineral-rich territories, particularly in the eastern regions, remain under Russian control or are areas of ongoing conflict. This reality complicates immediate extraction efforts and raises concerns about the security of investments. Moreover, the lack of modern geological surveys adds a layer of uncertainty. Current assessments of Ukraine's mineral wealth are primarily based on outdated Soviet-era data, making it difficult to accurately gauge the true potential of these resources. As one U.S. official familiar with classified intelligence assessments noted, the consensus is that the value of Ukraine's minerals may not align with the high estimates being publicized. Additionally, the infrastructure required for large-scale mining operations has been compromised due to ongoing hostilities. Rebuilding this infrastructure would necessitate substantial investment and time, factors that could delay the anticipated economic benefits of the deal. The U.S.-Ukraine minerals deal carries significant geopolitical ramifications. By securing access to Ukraine's critical minerals, the United States aims to reduce its dependence on Chinese imports, thereby enhancing its strategic autonomy in key industries. This move aligns with broader efforts to diversify supply chains and strengthen national security. For Ukraine, the agreement symbolizes a deepening of ties with the United States, potentially deterring further Russian aggression. By intertwining American economic interests with Ukraine's stability, the deal serves as a strategic deterrent, signaling to Russia that any future incursions would directly impact U.S. assets and investments. Domestically, the deal has elicited mixed reactions. Proponents argue that it offers a pragmatic solution to recoup U.S. expenditures in Ukraine, while simultaneously bolstering domestic industries reliant on these critical minerals. Commerce. Secretary Howard Lutnick emphasized that the agreement could provide financial benefits to American businesses, potentially revitalizing sectors such as defense and technology. Critics, however, caution against viewing the deal through a purely transactional lens. They argue that monetizing support for an ally in exchange for resource exploitation may set a precedent that undermines the moral and strategic foundations of international alliances. Furthermore, concerns about potential corruption and the equitable distribution of profits within Ukraine have been raised, highlighting the need for transparent and accountable management of the proposed Reconstruction Investment Fund. President Trump's very big deal on Ukraine's mineral resources represents a complex interplay of economic ambition, geopolitical strategy, and ethical considerations. While the potential benefits are substantial, realizing them requires navigating a myriad of challenges, from securing conflict-affected territories to ensuring transparent governance. As the agreement progresses, it will be imperative for both nations to balance immediate economic interests with long-term stability and ethical imperatives, ensuring that the partnership serves as a foundation for sustainable growth and strengthened alliances.